Today we'll be talking about gold, price action from last week, a segment on the US versus New Zealand dollar again, look at how Bitcoin's acting, and then take a look at the AI circular revenue scheme or scam, depends on how you look at it. And then finally, some underappreciated value names that have been underperforming the SPY, the S&P 500. So let's kick into it. So first of all, let's share my screen and let's look at gold. So I'm seeing a lot of content that's now hitting the mainstream media about people queuing up to buy bars of gold around the world, specifically as well Australia. It's become quite popular, but gold in general has been a favorite for some time. And really kicking off that reflexive kind of price action, especially over the last couple of weeks especially. But, you know, it's been a relentless trend up for obvious reasons as investors are deciding to buy real assets or equities as a way to try and avoid being in fiat. So as you're getting currency devaluation, investors are flocking to non-fiat means, assets, etc. So I don't like it when I'm seeing so much public activity and speculation in gold. You do have that quite nice central bank movement and government movement where you're seeing more flows and purchasing of gold, which indicates a nice kind of enduring trend. However, the speculation is now on Main Street. You've got people queuing up for hours to buy bars of gold. And at the end of the day, 1 bar of gold will always be 1 bar of gold. And it does create a little bit of a red flag for me. And the biggest red flag of all would be this final day of trading where you see, you know, a wide margin of price action, a little bit of a blow off top, and then basically not a very strong finish to the day, although a rebound. So I don't like that. I don't like the level of speculation and the level of attraction in the media that gold is getting. And if the indexes were to be affected and we were to, let's say, go into a recession, correlations would tend to move towards 1. So gold would not be doing well if we hit a recession, or if a positive catalyst hit, like a ceasefire and a resolution between Russia and Ukraine, which I think is one of the remaining strong catalysts that could kind of bolster some momentum and help us regain some momentum in the indexes. As you see here on the SPX, you see weakness as the China trade escalation kind of started to kick up again. And then we've had a recovery as various comments have been walked back and negotiations are starting to unfold. And then, of course, the Israel ceasefire situation has also been a positive catalyst for the market, but didn't send the market to the moon. However, has definitely created some stability, and there's definitely some positive feelings around geopolitical activity with that ceasefire. Moving on to our one of my favorite topics, which is USD NZD. You can see that this USD NZD trend has just been relentless, very, very strong, historically very, very strong. But with the situation in New Zealand, you kind of understand why this is happening, especially as we're lowering interest rates aggressively while the US are cutting much slower and have openly recognized and acknowledged that they probably shouldn't be cutting. And it's a bit more of a political kind of juggling that I think is going on. So I guess from a long-term perspective or a medium-term trend of New Zealand economy not doing great, and that factor affecting the currency for us, you do have Trump and the US that ultimately want a weaker currency and want lower rates. So that could lead to relative strength for the New Zealand dollar at some point, but it's just a challenging time to hold New Zealand dollars and hold New Zealand assets. Bitcoin's well off the all-time high now, had quite a nice drawback, broke through some levels, and there was that big liquidation event that was triggered by all the leverage in the system, in the crypto system, and we've seen a stabilization of some sort, but it's still pretty weak. So it's a hard one to call here. Just not a great setup, really. Risk assets are acting kind of strange, I think. If we look across those three, gold, SPX, and Bitcoin, there seems to be a theme of weakness, but we haven't completely broken down. All right, let's move on to the circular revenue or AI revenue, and kind of just a little breakdown of what's going on here. So let's go. It's a broken diamond. So you've got OpenAI, who are essentially buying chips from Nvidia, but they are receiving investment from Nvidia, which means that they get to use that investment to purchase the chips. But anyway, they purchase chips and they get investment from Nvidia, and then they contract Oracle to through a cloud contract to provide services. And then Oracle goes and purchases chips from Nvidia. Meanwhile, OpenAI is also buying chips from AMD, but in exchange, they're going to also receive equity warrants. So again, it's an exchange of chips, in essence, for equity warrants. So wherever any of them are spending, they're ultimately all giving it back to one another in some way, shape, or form. And what you see when this is ultimately like some sort of vendor financing scheme where OpenAI are going out and putting out a lot of future obligations as well as Oracle to basically invest and spend. And the sort of investment they're looking at is well in excess of the actual current revenue they have. So it's highly speculative and relies on hyperscalers to really continue to buy aggressively and spend aggressively